Our current module is about sources of financial information. There are three sources of financial information. Number one, transaction. Number two, events. And number three, conditions. As a matter of fact, whatever the financial information that we have to deal in accounting, or in a way in financial accounting, will be coming up from transactions, events, and conditions. And these three are also known as accounting phenomena. So transaction is a dealing between two persons. That can be a social motive dealing, which is known as social transaction. For example, receiving a birthday gift, or a business dealing, economic benefit dealing, which is known as accounting transaction, in which we deal with other persons and which is measurable in terms of money. This is accounting transaction. So accounting transaction is a dealing between two parties in which the business entity would be dealing with its owners, or the business entity or the entity would be dealing with the people other than the owners. So we have to identify two criteria for being a transaction and accounting transaction. Number one, it is measurable in terms of money. And secondly, it is a dealing of entity with its owner, or other than the owner, other persons. Here we will learn through a practice that either the dealing or the transaction or the financial information is an accounting transaction or not. So let's start. But please, I'll advise you that while attending the course, you should keep a writing pad with you, a calculator with you, and writing device, pen or pencil with you. These three things should be very much ready with you while you are attending the course on accounting. So please be attentive. Payment of staff salaries made by check. Is this an accounting transaction or not? Just process in your own mind. I'll come up with the answer right after discussing these points. The second is appointing a production manager on contract. The third is having a conversation with foreign supplier for import of raw material. Fourth is placing an order for purchase of production machine. And fifth is purchasing motor vehicle and paying cash for the price. So the correct answer is number one is accounting transaction. And then number 5 is accounting transaction. So what was the criteria? That it's a dealing of entity with a person, and that person can be the owner or any other person, and is measurable in terms of money. So number 2, 3, and 4, you see that appointing a production manager, you are not dealing in any person for money. Third, having a conversation with foreign supplier for import of raw material. Money measurement is not there. And 4, placing an order for purchase of production machinery. Again, money measurement is not there. You're just placing the order. Let's have another practice. Identify accounting transactions, upkeeping expenses of building, collection of dues from customers, negotiating with bank for taking loan, receiving cash against loan from bank, payment of personal expenses of the owner in cash. Here, number 1, number 2, number 4, and number 5 are accounting transactions. Well, the second source of information is event. Event is happening, which is measurable in terms of money and can be a non-monetary. But in accounting, we would be focusing on the event which is measurable in terms of money. For example, loss by fire, loss by accident, foreign exchange gains or losses. And whereas if we look into non-monetary events, it can be winning or losing a game which is not having any financial impact. So in accounting, in financial accounting, we would be focusing on the monetary events. Conditions, the third source of financial information. It is just an adjustment in already recorded transactions and events. It can be a provision against receivables on which we have doubt, or another example can be a depreciation of assets. By the way, these two concepts we would be discussing in our upcoming modules. So in our way, condition means that we are having some adjustments in already recorded financial information. Well, which of the following information is transaction, event, or condition? So stock in godown lost by fire, it's an event. Then giving away gifts to employee for the entity, it's a transaction. Then training to employees through external trainers, yes, it's a transaction. Then organizing a dinner for entity's valued customers, it's a transaction. Recording depreciation for machinery, yes, you are correct, it's a condition. Insurance claim recovered from insurance company against stock lost by fire is a transaction. And cash paid as charity to a hospital is again a transaction. So the important tips that we have to keep in our mind, that 3 sources of financial information: transaction, event, and condition. Transaction results from a deal. First party is the entity itself dealing with others, and each accounting information is measurable in terms of money. ITTR is very important to remember. Thank you.